and the airdrop started off slow, and then it picked up really fast. Like, we just got swarmed with users, and we noticed that the user base was really concentrated to, like, a certain set of countries. And so we thought, like, well, wouldn't it be better if we would somehow be able to diversify the airdrop more, and to kind of spread it out around the world, to really build a stronger community. And so what we started working on over the weekend was a new airdrop bot that would check for your geographical location.
Ah,
And and we and we and we just launched that bot, like, I think it was yesterday. Yeah, yesterday. And so far it's proven to be really reliable. We had a
nice.
bunch of people trying to, like, spoof it, spoof GPS, etc. But we ended up being able to look at a whole set of indicators to determine if we're getting spoofed or not. And yeah, we have, like, a really reliable airdrop system, and so we're airdropping to the US right now, and then after that, we will go through Europe, Latin America, and kind of really try to disperse our supply as diverse as possible.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
So today I'm excited to bring on the program Alex, and Alex is with a project called Eureka, and that's Ureka, not EU. And Eureka is an Olympus fork on the Binance Smart Chain. And it's a little bit unusual for us because we typically have more established projects on the show. But Alex and I started talking when they were getting ready to launch. And one of the things I find interesting about new projects getting started, especially in the Olympus Fork arena, is how you build trust with people and how you get them excited and encouraged about what you're doing and how you make them into a community. So we're going to climb into some of that with Alex today. But Alex, thank you so much for joining the show and for coming on board. I know you guys are doing some different kinds of things with Eureka and have a bit different philosophy on emissions, et cetera. But if you could first kind of introduce yourself, tell us your background, kind of where you're from generally, whatever you're comfortable with disclosing. And then let's get into the story of how you got into crypto and why you're in crypto. And then we'll climb into how Eureka came about.
Thank you for having me, Brad. So
Sure.
I grew up in Northern Europe. I have a very technical background from very early on in my childhood. So growing up, my father had a small electronics shop as a electronics hobbyist. So I started soldering electronics at age 7,
Wow. I
and
still can't solder
and
electronics.
and so the whole the whole aspect of problem solving and just creating systems with specific problem solving properties in mind comes really natural to me. And in school, surprisingly, I didn't perform well. I always questioned authority and I hated learning new languages because nobody explained to me why I had to and I didn't see any use in it. So without a real utility function, I refused to comply.
Damn.
And so coming out of school, I started a entrepreneurial career pretty early on and started a company in optical electronics.
Oh, nice.
And
So like opticals for computer systems or optical for scanning, or what kind of optical?
so it was basically optics related to low light environments. But in parallel to that, I also got really interested into Bitcoin in late 2013, very much as a retail investor. And I started with just a couple of $1,000 and that went up to like $100,000. And then in the
Nice.
following 2 years, I lost everything, doing
Oh,
all
brutal.
repeating all the typical retail mistakes. That had no idea what risk management was, had absolutely no idea what portfolio management was. I was just jumping in ice cold water.
Well, once you
And
make $100,000, you think you can't lose, right? I mean, that's kind of how we all when you come in and you make that kind of money, it's like, I know exactly what I'm doing. I can do anything. Yeah.
especially when you're like, I was, I think, 19 years back then.
Yeah, yeah.
19 years old. And so that was just such a crazy experience. And after that, it gets you hooked. You always kind of keep an eye on crypto, always keep a foot in the door, so to say.
Sure.
And even after losing all that money, you always had that feeling of, oh, there is still so much potential in this space. This is something that's just so interesting. The speed of innovation and it's just the nature of the new concept of that of a hybrid kind of information type currency was just so like it it just sucks you in and there's no getting out of it,
Yeah.
especially as a very technical minded person. There's just no escape, and I've seen that for so many people getting into this space and you just can't go back.
I know exactly what you mean. And it's funny that way because you could lose everything 12 times and you're still going to be so fascinated with the possibilities. And I think that's we all kind of then have this disconnection or two paths that's going on in our head, right? The one is the hey, I can make money trading this. It's a volatile market, blah blah blah. I think I can do no. I can always make it better. And then the other side of it is, whether it's technical or freedom of finance or whatever else, there are these like mission oriented things that captivate you, that keep you engaged with it, that makes it so unique and different that it really it keeps hold of you. And it may be similar personalities that act that way, because it's really funny when you were talking about your childhood. I was the kid who, at a very early age, and I'm much older than you, but at a very early age, I got my first computer, when I was 13 or 14 years old. But prior to that, every electronic device I was ever given by my parents, games or whatever it was, I was always taking them apart, right? I was like always tinkering with them and trying to fix them. And in school, I never really applied myself unless it was something I wanted to learn. So maybe it's just us that are going to make up all of cryptocurrency because we have that personality. I don't know.
Eventually, every electronic device in my home ended up coming apart as well. And in the beginning, it was unfixable afterwards, but slowly I was able to put it back together again.
That's awesome. Well, you obviously had a dad that would support that because he had an electronics hobby, but or shop. But my parents weren't so excited about the disassembled electronic devices. But I eventually did learn how to put them back together. But I never got the soldering skill. I didn't take them that far apart. So
So after around like the 2016, 2017 bubble, I tried to launch my own crypto project with a couple of friends. for the first time, and that bear market following that was so brutal.
Oof.
Like, there was no recovery from it, and everyone had to lick their wounds basically and take a whole new approach. And that's where the Eureka journey kind of had had its roots from that experience. And so what emerged from that was a whole new take where I basically said, all right, I want to take out the human component out of trading because that's the most valuable one, right?
Right. Right.
The emotional ups and downs, they really interfere with your decision making. Unless you are like a really hardcore equities trader and you have been through a couple cycles and you have completely kind of neutralized that emotional aspect and have a super rigid trading frame, I think it's almost impossible to consistently make money in the market trading. I'm not
Yeah.
talking about investing, but really trading on a, say, a daily, weekly, monthly basis.
Yeah, the only way I'm successful is when I automate using data, and then I'm out of the picture, right? I only have to make a few decisions, and then afterwards, because of you're right, human beings are fallible, and we make emotional decisions in the heat of the moment, and it makes it very difficult to do that. So you're saying kind of you were having this thought process of how do you make money in these markets without having to rely on your own mental judgment and the ability to control your emotions.
Exactly. So that was kind of the problem that I presented to myself. And that problem turned out to lead me down a very interesting path. And after months and months of just tinkering on that problem, it progressed, like the road kind of solidified and it was becoming clear I'm down a very interesting path compared to the previous crypto journeys that I
What kind of
undertook in.
what kind of things were you looking at that time frame? I mean, what was your kind of thinking process about how you separate out that so that people can make money? Yeah, I mean, kind of what
So
was your path there?
so the first kind of step was, how do I make the most amount of money with the least amount of risk, basically. Like, what's how far can I squeeze this ratio without looking at absolute returns? I'm just looking at the ratio, like my risk return ratio. So if I can keep the risk close to zero, but get a 20, 30, 40% return a year, then I'm straight on my goal.
Right.
And so with that in mind, the most simple strategy at that time, which worked like right out of the box really well, was holding your Bitcoin margin long on BitMEX and shorting the perpetuals, and then collecting the funding rate. And then I had
Wow.
a team of two coders that helped me write a bot that would automate the capital allocation between the deliverable futures and the perpetuals, wherever annualized return was the greatest at the moment.
Wow. So, okay, obviously, most people aren't going to be able to execute that level of complexity on their own. So you created a bot to automate it. Is this something you were just using for yourself, or was this something you were other people were using as well?
It was something I was just using for myself.
Right.
Eventually, once the concept would be proven successful, of course, with a very low risk return ratio, the magic that you're able to apply to it is obviously like leverage. If your risk is super low, but you have a decent return, then what you can do is leverage via raising money, ideally from investors, or even take out a loan if you're willing to personally carry that leverage risk. And so that was kind of the state of mind back then. And back then, the funding rates under its perpetuals was really, really generous. Alameda started off that way, right?
Right.
They were just shorting the futures and holding spot, kind of now and then closing that position when the futures dipped into discount. And so at that time, it was the ideal strategy to get started in that space. Now it's very, very different. Like perpetuals aren't paying that much anymore. It's very saturated trades, especially with the institutional futures coming out. I expect this to get suppressed even more. But that was the start. And then from there, the thinking was, well, we have this capital on BitMEX and we have that position on. What else can we do with it? Why don't we try market making around that position at the same time? So why not collect the funding rates and market make? And that was where the real journey began, because that was such a crazy rabbit hole.
And this is market making on centralized exchanges.
Yes, exactly.
Okay.
And more specifically, Bitcoin perpetuals.
Okay. And I mean, that's a learning curve in itself, market making, right?
Oh, yes, it is a multi-year learning curve.
I was going to say, we have a guy in our community and for Material Indicators, my trading algo company, and he's been doing it on BitMEX for years. And he still, even though he's made a lot of money doing it, he still complains constantly about how difficult it is. Like, just never ending complications.
I very much have the same experience.
Okay.
But that kind of forms the background that I have now, that we got kind of good at market making. We started to make decent money in the early bull markets of the current cycle. Back then, the market was very generous towards market makers. Like the spreads were really wide, the volume was incredible with all the institutional hype and the huge money flows. Like market making thrives in an environment where people need and want and take liquidity with a certain time pressure.
Right.
And so that's the environment where you make the most money. And we were right in the middle of that environment when we started developing the market making strategy. So it was very lenient towards, say, more simplified market making approaches.
Right.
And of course, then when the market turned around, you got a huge reality check. Like, oh, yeah, we were able to make money, but now we're just losing constantly. And
It's brutal.
what is going on?
Yeah, when it stops working is when it really sucks.
Exactly. And then from that point on, the whole market making mission became one of, all right, how do we minimize drawdowns? Like, how do we not lose? Because once you understand how the core mechanics work of making money, then your whole focus just completely switches to, all right, now we need to stop losing money within certain scenarios where the edge cases keep wiping you out, basically. So you make money for a couple days, and then an edge case kicks in, a news hits, something unprepared, or a really weird market that got you caught on the wrong side of the market. Like that repeatedly forces you to completely focus on how do I handle those events.
And did you do that from the perspective of kind of a statistical play? Like, okay, I know that, maybe these specific market conditions or these size of trades, or I have no idea what the factors are that you're factoring in. But I mean, that's something that I've actually dealt with quite a bit. We have a mean reversion indicator, and we spend a lot of time analyzing the data from, thousands and thousands of previous trades to understand the best setups for the trades that we're executing. But you're executing things that are, as a market maker, I mean, I'm assuming these are large numbers of trades that you're executing.
Yeah, so we got to a point where we were making enough volume to be part of the Binance market making program.
Nice.
And that, of course, gives you a nice boost because they give you a low latency APY connection and preferential fees. And that makes it easier. it's still really, really difficult, but it gives you a little bit of a boost, and
Gives you some
you're
slight edge on it.
exactly. And the really competitive markets like Ethereum and Bitcoin become more viable.
Hmm.
So
Interesting.
here's 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 a tip for anyone that wants to get into market making. Starting out, you are going to be faced with high fees, and so the market making strategies that are compatible with high fees are the ones that result in a net wide spread. And there's two ways to get there. There's either you stretch out your time frame, like your overall inventory holding period, or you go with a much less competitive asset, like some smaller altcoin, and sometimes altcoin projects will even pay you to market make.
Yeah, that's a good point. Now, of course, if you're in the altcoins too, you face greater volatility, right?
Yes, you should definitely hedge your inventory either through a loan directly from the project, or even on perpetuals if they're available,
Nice.
or maybe through some DeFi protocol.
So, are you still market making too?
Right now, yes.
Awesome. Okay.
And so that's where we slowly drift into the idea of Eureka. And what
Have you
really
been
fascinates,
active in DeFi as well during all this time?
yes, I've played around in Ethereum and then Solana, and of course Binance Smart Chain, and and especially like those scalable chains, the low block time scalable chains like Solana and Binance Smart Chain and Avalanche. The interesting part there is that the hurdle to quantitative strategies are much lower than on Ethereum,
Sure.
because on Ethereum the gas prices just price out like almost all of retail.
Yeah,
Like
absolutely.
especially now, where if you want to execute any kind of multi-step transaction, you are paying like thousands of dollars in gas fees,
Yeah.
and even way more if it's latency sensitive.
Yeah.
Then you have to get into MEV, which ends up like you have to share your profit with a miner.
Yeah,
So you end up with 5% of your profits usually, right?
absolutely.
And the rest goes to the miner that stacks your transactions preferentially in the memory pool. And that's where the decision to start building on Binance Smart Chain, because it's it's a chain with lots of opportunity in that space, quantitative space, a lot more so than Solana or Avalanche, because you have all the big players on Solana. Alameda is active there. There's a bunch of other market making
Much
prop
more
shops.
institutional. Yeah.
Exactly. And on the other hand, there is so much retail demand on Binance Smart Chain for liquidity at the same time. And most of those strategies thrive on liquidity demand. And that was really the core of our decision to start there. For Eureka, that's where we are going to start deploying our quantitative strategies in the future.
All right, so let's backtrack though real quickly how you got to Eureka. I mean, was this a thing where you'd been following Olympus DAO and other forks and you said, wait a minute, this kind of gets me to the model of kind of a recurring income for investing? Can you kind of take us back through how you came up with the concept and then explain the concept to us?
So the Olympus DAO concept is really interesting in that sense that it forms a mechanism that allows you to utilize the treasury for yield generating purposes, right? And
Right.
at the same time, there's a very interesting balancing component around that treasury through staking and the bonds that allows you to, on one hand, raise money for the treasury, and what else is happening is through the staking, you also reward those who stay vested for a longer period than others, right?
Right. Right.
And in a way, it's a linear function or a dynamic. It's difficult to really draw parallels, but it is very similar in the core mechanics to say when you raise money for a fund, right? You have the management fees and the profit fees. And in a way, that functionality is translated in a quantitative dynamic way through the staking and through the bonds. And the treasury is kind of a decentralized way of raising leverage in that sense for your strategies. And so where I think the real value can be unlocked is when you also decentralize the alpha generating part. Like we initiate the Eureka project with our alpha strategies, but we strive to build a system where we see something like community compartments that if you contribute a strategy, then you're rewarded. Like instead of say buying bonds with liquidity tokens, LP tokens, what if you could get bonds in return for providing us with a certain quantitative signal that would generate a return for the treasury?
Very interesting.
And yeah.
So let me make sure. So can you summarize for me what Eureka is for the market, right? What it is for traders, what it will do.
Right now it's not much. Right now it's we launched a contract. We strive for a very wide distribution because distribution usually translates into awareness, and awareness is like one of the key pillars of any crypto project. If you don't have awareness, it's not going to succeed.
Yep.
And we didn't raise any pre-sales, we didn't raise any money, so the usual Olympus DAO mechanics kind of are being twisted here a bit, because usually for the Olympus DAO protocol to properly kickstart, you need a pretty sizable initial treasury, and it usually comes from a pre-sale, and that's a big regulatory gray zone, right?
Sure.
And
Sure.
so that's something we definitely wanted to avoid. And one way of avoiding it was like, well, why don't we mint 10 million tokens and then we distribute it really wide, and hopefully we pick up a couple of really smart people along the way, and at the same time generate awareness, and at the same time solve the distribution problem, which is one of the key problems in any currency, like cryptocurrency, by
Yeah.
far.
Yeah, absolutely. So, okay, so from the distribution perspective, you're not going to be doing, are you going to be doing any kind of public sale as well? Or is it going to be exclusively just distribution through this airdrop and then people buying it themselves in the market?
It is exclusively going to be through airdrop distributions, and then we later on activate staking, and that's going to reward those who believe in the project vision, while those who end up not paying attention and not staking their airdrop get slowly diluted, right?
Yeah, yeah.
And then from there, we are going to activate the quantitative bonds to raise the treasury capital for the actual yield generating strategies. And then from there, we're going to port over to Solana to also take advantage of the opportunities there, and then eventually Ethereum, Avalanche. So that's kind of our rough roadmap at the moment.
And when you say over to other currencies, do you mean in a wrapped form, similar to how Olympus is and Time Wonderland are doing, or are you talking about actually deploying on those chains?
We are going to try to actually deploy on this change and potentially like share the same token, meaning that we deploy on Solana, however, using the wrapped token from Binance Smart Chain.
Okay, got it.
And
So there'll be a separate staking copy of the staking engine there, as well as the other dynamics that you're going to introduce later.
Yes. So that's the plan. We are probably going to be faced with a couple of challenges there, like logical mint priority challenges and stuff like that.
Well, and on
And
Solana, you'd have to maintain two separate code bases, right?
yeah, because
They
you
they
can't
haven't
just
implemented EVM
port
yet.
it. Yeah. So we
Okay.
would have to translate that into Rust. And yeah, so initially the easiest port is going to be Avalanche, I think, at this point. Ethereum is, of course, also easy. However, it's expensive to operate on.
So you're building Eureka, you're going to build this treasury up, and frankly, I don't know of a fork yet that's doing things the way you're doing it, right? So I applaud you for whether or not it was regulatory based or just good of the project based. I love the fact that you're just trying to get this wide, massive distribution, and you're not concerned about this big sale at the front. Plus, I think it also builds trust for people, right? if if you're not immediately asking people to buy something, then that's kind of one less step in the risk profile for people worried about getting rugged or whatever, right? Now, of course, once you build up treasury, that's a different story and the bonding is happening, but it certainly makes people say, oh, wait a minute, this is different. This is a project that's trying to do things a bit differently. I'm getting inklings in the course of this conversation that your expectation is that Eureka then will be executing, the project will be executing strategies in the market to earn more for the project. Am I right in kind of getting that? Similar to kind of your
Exactly.
background of market making and everything else, is that you're going to execute investment or trading strategies utilizing the treasury to make more money for the project.
Exactly, correct. So a decentralized quant market making protocol, basically.
Oh, nice.
And and also further down the road, I think something that's very viable is like a operationally based treasury token. So for example, I could imagine giving like having a token that represents a certain centralized strategy. And so
Oh,
you could have a company that issues a token, raises some money, and with that money, market makes on the centralized exchanges. And then with the generated returns, it buys back the token and burns the token.
hmm.
And that token is exclusively sold to the Eureka treasury. And that way you can tie the centralized market making world into a decentralized market making protocol, which I think is by far the biggest opportunity here, because all those other protocols, they all limit themselves to the decentralized kind of opportunity space.
Sure.
But I think with that specific mechanic, you can start actually like funding teams and emerging like quant startups and kind of become a diversified sort of decentralized multi-strat market making protocol in that sense, where people are very familiar with the concept of providing liquidity to an AMM and earning a return. However, you can translate that to the centralized market making world, I think, with this concept and generate much more preferential returns because you can hedge properly and you can protect against adverse selection, like what the people usually call like impermanent loss
Right.
within the AMM world.
Sure.
And that's basically just means that you got caught on the wrong side of the market and you continue holding that position while it runs away from you.
Correct.
That's impermanent loss. And that's a problem that almost, or I would say all the centralized market makers have solved that with their own quantitative strategies.
That's interesting. So How I mean, look, I think once the project's proven itself, that obviously that's certainly something to pursue, especially with your background and expertise and success previously doing that. Do you think you'll have an issue with the community kind of making that leap of trust into something that's moving out of this decentralized world into the hands of other people in the centralized world, and that there can be no real smart contract control over those funds, right? They're going to be managed and controlled by somebody else on the other side. You could certainly monitor it, right, via APIs. You could see at all times what's happening with the account. But I guess you would have to build up a strong level of trust. But if people are just investing in the community and it's not a voting decision, it's just a core team decision, I guess it doesn't really matter. And people will vote with their staking and their holding.
So I think you can control for that risk by diversifying, so that
Okay,
you have 10 projects that each have their centralized exchange market making operation.
great.
And there is certainly risk, and all those projects would definitely go through KYC and AML and the whole rigmarole and completely be fully transparent. And ideally, we would we would get to a stage where we would be able to work together with even like maybe some of the bigger names out. However, I do realize that it is definitely a challenge to kind of bridge that trust.
Sure.
But at the end of the day, it's no different than seeding a startup in that sense,
Sure.
right? Where you have the same due diligence and you review the strategies and you review the people's background and go through the whole process. And basically in the startup funding world, they also control for that risk via diversification. And I think I have kind of the intuition that that's the only solution here as well, that you will have have to diversify. There is going to be a certain percentage of bad apples, but if it's 1 out of 10, 1 out of 20, given the potential returns, then that's something you can stomach.
Yeah, it makes sense. And I think if the holders understand that's the strategy and that's kind of your accounting for that risk in the model, I think that makes a lot of sense. Do you also expect that Eureka's will be investing in other investment strategies that are also on DeFi at the same time?
Yes, absolutely. And that's also where we are gonna start, because obviously, like, it's a huge undertaking to raise that kind of talent, raise that kind of money, and set up that infrastructure operationally. So that's very much like at least a year out, I would
Okay.
say, realistically. And so leading up to that, we would deploy a like yield generating pretty vanilla DeFi strategy, and maybe also combine it with a couple more advanced setups where you make use of like stable coin based yields and lever them up a bit, but nothing crazy, like nothing that would expose people to undue risk.
So would you also envision that the protocol might invest in other projects themselves, either, I don't know, pre-sale or private sale, or later on because the project thinks that there's good innovation in a new protocol, and so you'll buy and stake tokens, or you'll, I don't know, any other method that you could invest in DeFi, I guess. Is that something you also envision potentially doing?
If the team is really strong, then potentially yes, given the roadmap, and maybe we can get access to a certain network of talents that way, that's potentially in line with our roadmap down the road.
Cool.
Because the biggest and like DeFi is in a state of complete undersupply of talent right now. Like
Yes.
everyone has a need for developers, talent, smart people, and the space is growing so fast that there's this huge drought of smart people in a way, because the smart people have gotten really rich and they run their own protocols, and there's just so much opportunity that everyone's really like literally competing for brain power, and awareness is the two like the two most valuable commodities within crypto in general.
I totally agree. Yeah, it makes it very difficult. You're right. It makes it difficult to find projects that are new, that are actually able to have that talent coming in. I think some of the existing tech infrastructure world or tech world is coming into Web3, and we'll start seeing some people who are bringing their skills over, learning Solidity, et cetera. But I think you're right. It makes it difficult to make those calls. So you're taking a very unique approach to this launch as far as Olympus forks go. And you also kind of have a philosophical approach to the emission APYs.
Yes, so a too aggressive emission generates too much momentum in the market that leads to too steep of a crash afterwards. It's very similar to when you had too much sugar, your blood sugar shoots up and then it crashes much lower afterwards. And that's exactly the same with the emission rates. So if you crank up emission rates too high, too early, sentiment shoots up, price shoots up, but then it's going to come crashing much lower. Because if you incentivize holding beyond a reasonable incentive, then what happens is that you start delaying volatility. So volatility can never be removed from a system. It can only be postponed. And whenever you steer up and collect volatility too much, then eventually you're going to reach a pivot point where, with a simple sentiment shift, the whole mechanic flips on its head. So instead of the APY working for you, it starts working against you, because now people are selling despite a super high APY. And that kind of starts a spiral where the whole system contracts and money flows out of the system instead of flowing in.
Yeah, that makes complete sense, and I think we've seen that happen to some extent. When and I look, I think there are variables in all of this that impact it. Like, for example, I think we've seen that happening even somewhat to Olympus DAO, which is why the community has voted to reduce the APYs down to about 1,000%, which is obviously still exceedingly high relative to the rest of the financial world. But in the Olympus fork world, it's small. And I think there are other variables too. I think that the community that gets built makes a huge difference. And there's a ton of actual building happening in the Olympus community. There's a lot of activity around the project in terms of investing in other sub DAOs. There's all kinds of partnerships and integrations happening, which I think helps sustain that. I think the balancing act that I mean, you're kind of taking on this task for yourself is, how do you get to that happy medium point where the APY is enough to keep people in and not too much that they're dumping out? And what's been your thought processes on that? And what are you expecting Eureka's kind of emissions process to look like?
So I think to get an answer to that question, you have to walk it backwards. And when I say walking backwards, like, what are the desirable effects ultimately? Like, what's the impact of a high emission rate, or what's the impact of the emission rate in general? Like, what is actually happening when you reward a pool of users with a greater, like increasingly greater share of the overall issued tokens? And so effectively, like, the 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 relative APY is very different to the absolute APY, right? Because the relative APY is what is your proportional share of total tokens look like,
Right.
and and at at what rate is it going up? And so, for example, if you crank up the APY to some crazy numbers and say we have 5,000% APY, however, 99% of people are staked, then your relative APY is only 1% of 5,000%, which is like 50% a year.
Right.
And so the balance there is, it's basically at the end, how much APY do we need to incentivize the core community to stay staked,
Right.
and to basically slowly move the network from the unstaked holders to the staked ones, because they are the ones who stay active, contribute, and lock their value with us, right? And looking at other own forks, somewhere at like 70% staked, somewhere at like 80, maybe 60% staked, and that number also varies a lot with how much is in the treasury liquidity tokens. And if you pool all those numbers together, most of them have very similar stake percentages while having widely different APY numbers. And what that basically means is that we can probably explore the lower end more and probably get to a similar staking percentage with a lower APY. And why that is important is because the lower the APY, the less risk you run to like delay volatility to a degree where it's explosive after a sentiment flip.
Right.
And that's something we try to really avoid, because that's volatility, like stewing up volatility is usually not efficient, because that just shakes up the system too much. And if it's avoidable, it's definitely preferable. And so we are basically going to explore the lower side of the APY, and if we see staking dropping off, then that's a obvious signal for us to increase it again. And I think that way we can find a balance that really meets both, like reducing the volatility delay kind of effect part of the mechanics, while still incentivizing the community to stake.
And that's a balancing act, right? I mean, you've got so many variables in making sure that functions properly as it relates to current price, as it relates to the activities of the project, and also as it relates to the sophistication of the people that are holding it, right? So, the interesting thing, and there's so many interesting dynamics in this market, but the interesting thing is your choice of Binance Smart Chain opens you to, as the first chain, opens you to the largest number of retail traders in all of DeFi, right? Concentrated number of retail traders, which is smart because it means that you can spread the tokens out more amongst a larger number of people, but it also means that you potentially may have some folks that don't even know what they're getting, right? They're not even familiar with, say, Olympus DAO, or they don't understand the mechanics of what's going on behind it. So it's going to be an interesting dilemma for you to make that balance on yield and help people understand it, right? And be able to communicate and educate them about it. And then I think also, like, I'm looking right now at your website, and I realize you guys are just kind of in the airdrop stage now, but like, I didn't even realize until you and I were talking now, this longer play strategy that you have of investing funds in strategies for trading, right? Whether it's market making or whatever else you do in DeFi. And I think that number one is great because it'll make people more excited about the project. But number two is also something where you have to kind of educate people about what you're going to do. In your mind, is this something where you're taking it from kind of a one day at a time approach? And, I'm figuring out how this airdrop's going to work. And then we're going to slowly start adding more of the functionality, the staking, whatever else that you're going to do in the near phases. Is this something where you think you're a year away from kind of full implementation, or where are you in your head, kind of where your next path is and what your next steps are like?
So you are right that we are kind of tackling one problem at a time. And so right now we're just focused on distribution and awareness.
Right.
And after the distribution and awareness phase, we are going to focus on education, because we want a large audience to educate, right?
Right.
And at at the same time, that's where we start increasing APY together with the education, because then you are going to kind of separate the people who are interested from those who aren't interested, while still having the benefits of a large audience, and you aren't consumed by like a whole complex marketing strategy and like token listings and like this whole charade of raising money just to spend it on ads and all of that. So that's kind of where we really saw the benefit of airdropping. And that's another very nice property of the APY staking, is that those people who do not understand, who don't pay attention, they are getting diluted over time. And even if you set APY staking to quote unquote only 1,000% a year, that basically means that if they aren't staking for a year, their relative market share is going to drop significantly.
Yeah, yeah, makes sense. Makes sense. Right now, if you look at the website, it's showing a 0.9% APY on staking. Is that going to kind of stay at that low point for now while you guys are doing this distribution? And I'm curious whether people have commented to you in the kind of mayhem of doing a massive airdrop.
Yeah, so the 0.9% like APY wasn't fully intentional. It is a bit of a quirk in the code base that the staking is tied to the treasury balance, and we
Right.
haven't raised a treasury balance yet.
Aha.
And so what
Ha.
we are what we are working now is making it compatible with our
With
minted
your
airdrop
model.
token model. And so what we are going to do now is write a separate staking contract that utilizes some of our minted tokens for the staking rewards
Very
to kind of
nice.
get out of that gridlock. And then from that point on, once we start raising treasury like assets, we can switch over to the original contract again.
Nice. No, I like that. I almost feel like, I mean, I know you have a plan and a path, but I almost feel like you're kind of doing this live evolutionary experiment, right? Where you're kind of
Yes.
breaking all the rules. It's rules is too strong a word, but where you're breaking the paths that were already there for this for this type of a protocol. And it's actually kind of fascinating to me. I almost think that it would be cool to have you kind of like, you know, blogging or doing posts every now and then on video that kind of talk about what you're learning as you go, because I think that would engage people into the experiment. And the cool thing is because it's an airdrop, the people receiving this have nothing to lose, right? So you're not going to scare people off by the fact that you're kind of experimenting, learning, and evolving as you go. They're actually probably going to be fascinated with it and feel like they've kind of grown with the project, right? And so they haven't invested thousands of dollars for you to say, by next week we'll have a $2 billion treasury and blah, 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 blah. They're just going to be like, okay, this is kind of cool. I'm going to watch how this thing works from the beginning. Anyway, just my 2 cents, but I think this is actually it's going to be a fascinating thing to watch.
You're definitely right there. And thinking about it, it makes a lot of sense to kind of communicate the learning curve through trying to bend this protocol to what we see as a vision for it. Yeah, I'm probably gonna get working on it after our call here. Set up a simple Medium page and link it on a website.
Yeah, I
Yeah.
think give it a little bit of the vision on the front page of the website of, hey, here's what we're doing. This is not your typical Olympus DAO. It's not insane APYs, and The reason you see the 0.9% APY is because this is what we're doing. Our model isn't the same. We're not doing a private sale. We're not selling out to venture capitalists. I mean, you can use all kinds of marketing stuff too with it. And you can follow along with me as we work to, like you said, bend the protocol to a different model. I think that's actually a really cool and unique thing. And I think a lot of projects talk about what they're doing and they do updates, but I don't necessarily think most of them are not going to disclose kind of, well, here's what we learned today and this shit didn't work, right? Or here's what we learned today and this was, you know what I mean? Whereas for you, you've got an audience that's participating with you risk-free, right? And it
Hmm.
doesn't become risky for them until they've gained a lot of value from what you're doing. So they're not people who have spent $10,000 to join this project in a public sale. They're people that got an airdrop. And so they've got nothing to lose to kind of see where it goes. So I think there's some real cool possibilities for that. Anyway, my unsolicited advice there. So
Great feedback.
cool. Very
Definitely.
cool. I mean, you started the airdrop last week, right?
Yes.
What has that been like? Like, have you been surprised by attitudes of people who are getting tokens for free? Have you been surprised by how much people want to participate or how much fast they want to sell and dump? I mean, what's been the experience like so far?
I was surprised at the exponential growth that we observed throughout of this, meaning that it started off really slow
Uh-huh.
and we tried to generate some noise and some hype on Twitter, kind of kickstart the whole airdrop referral system that we had set up. A very, very simple concept. And basically it was like you have a core airdrop token amount, and if you invite more people to our Telegram group, then you get like a bonus, right?
Right.
And the idea was basically how can we do this without spending money on marketing? Because we had no pre-sale, the token is all we have, right?
Yeah, exactly.
And I was surprised at how concentrated the pool of people would get. And so initially it was really widespread, but then you had those hotspots that
You mean
suddenly,
geographically?
yes,
Yeah.
exactly, geographically, like hotspots that would completely take off. And basically what would happen was that you had, say, the Indian community got really involved in it because they started sharing it in all the Indian air Facebook groups, and all of like that would stay concentrated just within that kind of community hub,
Right.
and it would completely take off. And I think we saw that happening in Indonesia as well. And that basically got me thinking, like, what if we could control for those hotspots instead? Because if we continue this path, then we're just going to saturate within those two communities
Right.
completely
It'll be an
with all our
Indonesian
tokens.
Indian project.
Exactly.
Yeah.
And so that's when we kind of took a turn in our strategy and said, well, we have, what if we like diversified pools of tokens to like all over the world so that we have like a widespread talent net in that sense.
How do you control that?
Well, obviously, I can't tell you exactly how he control it because people are gonna try breaking it, and they have been trying to break it like all day yesterday and today, and so far we have caught like 99% of people, I think. But basically, we work with the Telegram APY,
Okay.
with API, which allows us to see if they have, say, a phone number that matches the target location, if they are actually located in that target location via live location. And then from there, we kind of look at metadata around those
Yeah.
that that
Indicates for you.
that indicates for us if someone is trying to cheat or if they're actually there.
Nice. Very nice.
And at that metadata is what nobody has been able to spoof so far.
That's cool. How
Uh,
many? Oh, sorry. Go ahead.
yeah, no,
How many members on the team?
we are a total of 4 people.
Okay.
So it's myself as the project lead, and then we have 2 developers and a community manager.
Nice. Nice. And are the developers the same developers that were helping you with your market making and those kinds of things
Yes.
that you've been doing in the past? That's cool. So you already
Yeah.
have a strong relationship with them.
Yeah, it's a multi-year like friendship that morphed over to like business partners. Yeah, very very tight-knit team at the moment.
That's
But
awesome.
we're always looking for talent out there. So if you're interested in learning some basic market making concepts and also getting some DeFi experience, hit me up.
That's cool. I'll announce it on the show tomorrow too, because I guarantee you'll find people for that. Definitely. That's interesting. If I interview you in a year, what would you like Eureka to look like? Not like, Fantasyland, like pragmatically, where do you want Eureka to be?
So in a year, we should definitely be fully distributed, but that's a given. And
But by
the
fully
protocol,
distributed, do you mean fully distributed via airdrops or fully distributed like all supply?
so we minted 10 million tokens,
Uh-huh.
and some of them go to the team, and the rest should be completely like in the
Got it.
market.
Out of the 10 million. Okay.
Yes, exactly.
Gotcha. Okay.
And so that is one aspect of it. Another is a self-balancing mechanic that finds the balance between APY and staking ratio.
Hmm.
And also we want to start working with relative APY instead of absolute APY,
Nice.
because the absolute APY aspect is in a way misleading, because most people, they have no idea what the relative APY actually like entails. Like, what does it mean? And that ignorance is what causes a lot of the volatility that makes those projects fail, because it's information it's a mispricing of the token based on a misconception. And with any mispricing in the market, it's going to correct. And with that in mind, that's why I think it makes way more sense to try to educate the market about that relative APY concept, rather than keep playing that game of advertising absolute APY.
That sounds like your first Medium post.
Yeah, definitely.
And actually I think if you take that analysis and talk about the fact that this is, in your opinion, the weakness in the Olympus forks, that actually could probably get a lot of attention.
Yeah, you're probably very right there, because that's a weakness all over DeFi, with all the high APY governance subsidized token projects.
Yep.
The people feel, they think they get that return,
Right.
but the truth is very different, which
Yeah.
is why you have all those institutional players who never take on the token risk,
Right.
because they understand that.
Well, it'd be very cool for somebody to do a calculator like that, like a really simple calculator that pulls from some common protocols to show people. That's interesting. Very interesting. Would you be in a year the bonding functionality would already be happening and your treasury is built up at that point?
I want us to be in the process of building it up, I
Okay.
think. Definitely.
So it will have started, but
Yes.
it's not going to obviously be where you want it yet, but that will have started. And you will not yet have embarked upon the full-blown investing and trading strategies on DeFi and investing in market makers in centralized trading yet. You'll still be in a building phase at that point.
I think so, realistically, yes.
Cool. Cool. I I have to tell you that if you are at that point in a year and you've managed to sustain the attention of investors who are holding the token, staking the token, you will have succeeded completely in your education, because so many people in this world have such short time horizons. I think that building that framework of education is really, you have the potential to create a really hardcore community, right? Because the people who will stick through this and who will be a part of it will be the ones most willing to understand what you're trying to build, right? So I think it's a hard thing for you to do. Don't get me wrong. I think you got a lot of work to do, but I also think that there's tremendous potential in building something that's got a long-term foundation if you're able to.
I fully agree. The awareness and education aspect is probably going to take by far the most time
Yeah.
within like the next year, and probably going to take most of the focus in that sense.
Yeah, totally agree. You're going to be very busy. Is there anything else you think we should know about Eureka, you, the team, your plans, how people, I'll ask you the how people find your question in a minute, but anything else that you think people should know about the project that we haven't covered?
Let me think for a minute here. I think that people should know that the expectations should definitely be that of volatility. So if they buy into our project, it's definitely going to be a volatile investment. And
That's
because
part
of
of the
that,
plan.
and volatility goes both ways. And we are definitely in a quite bearish environment right now.
Sure.
And which of course means opportunity, but also downside volatility. And so if if this sounds interesting to you, then you have to have a long time frame in mind. And this is not a short like pump and dump and like, or a meme coin that shoots up 10x, 100x and comes down again. This is a project that initially, of course, is going to be very volatile. It's uncertain. It's very, very experimental. And at the same token, it makes it very exciting, at least for me, because of its experimental nature, because it's trying to solve a new set of problems. And I think that's something to keep in mind when venturing into this. And if this sounds interesting, or we we really, really value community. That's the most valuable commodity. It is basically the essence of any crypto project out there, and so that's what we are focused on building. We are not focused on the token price. We aren't focused on getting listed on exchanges. We are just focused on building the product with the community. And yeah,
That
that's our goal.
that's awesome. I love that full disclosure, and I think there's going, the interesting thing is your timing, right? Because yes, we're hitting a bearish phase, but a bearish phase is when people start looking at fundamentals, right? And so the interesting thing is you're someone that's actually trying to be more conservative, more long-term think, and someone who's trying to bend the fundamentals a bit, or alter how we think about these projects. So I actually think that may work in your on your behalf, is the fact that this is a downtime, because I think people start thinking, okay, what was I thinking aping into all that crap? Let me look at the things that are actually building something long lasting. So I think that's actually, and you can see that sentiment happening on Twitter right now, right? People start pulling back and saying, oh wait, okay, what can I do? What can I count on a year from now? What can I count on 2 years from now? Instead of like spending every day of my life aping in and out of things. I actually think that the launch time might be really interesting for being in this kind of bearish time. So interesting. I ask everyone that comes on the show, who's someone or a project in deep that you think is really critical, or for whom you have, a great deal of respect, that you think is innovating or that is really important to kind of the future of what everyone's trying to build here?
So that's a tough one because there's so much.
Sure.
But I think the general idea of being cross-chain and striving to be cross-chain is for me the most exciting, because that ensures survival, like that basically ensures survival
Right.
in L1 battle that's going on basically. And so rather than pointing out a person or a project, I'm pointing out whoever is able to solve that in the most like elegant manner. And I think whoever does that deserves a lot of attention.
That's great. And I absolutely think kind of that seamless, we don't even know what chain we're on future is critical. So I agree with you 100%. I think that's a great focus point. How can people find out about the project, get involved, take part in the airdrop if possible, join the community? Where do you point people?
So we got basically a very concentrated contact points like set up in that sense. We are on Twitter at Ureka Finance, Eureka with a U, and we are on Telegram, public group Eureka Finance.
Awesome. So it's UREKA is the website. Eureka Finance is Twitter, and Eureka on Telegram public group.
Exactly.
And they can find out there how to participate in the airdrop and get involved.
Yes, and we are kind of like keeping information in those two channels. And so to get the full picture, I encourage people to engage on our Twitter and in our Telegram. If you are just in either, then you are probably, at least for the moment, going to miss out on critical information. And so that's how we really, really want to reward those who pay the most attention at this phase of the project. And that's probably going to change down the road when we consolidate it on the website with a blog. But until that happens, I strongly encourage people to keep an eye on those two channels.
That's great. That's great, Alex. I got to tell you, I'm actually pretty excited about what you're trying to do here. I'm going to watch closely because I think it's going to be fun to watch, and I think it's going to be interesting to learn. And when you get that absolute versus relative AP material done, I'll be happy to retweet it and talk about it on our shows. So, and keep up with you and touch base with you again later on to see how things are going.
Awesome. Thank you for having me on. It
Hey,
was a lot of fun and also spurred on a lot of new thoughts. And I'm definitely going to start working on a relative API article.
excellent. That's great. Thank you, Alex.
Thank you. Bye-bye.